This right here is the reason most people fail in the market. That's right here. Your brain, the psychology, the psyche. Most don't even talk about that. That's crazy. We talk about strategies, we talk about different ways to do things and technical indicators. All that's great. But if you don't have the right knowledge of how the brain works, the emotional aspect of the game, what happens when you're down, what happens when you're up, then you're going to lose big. And that's why I created a training just for that. I'm going to show you right now in this next 40 minutes exactly what happens to you when you're in a loss, when you're in a gain, what you could do about it, and be very, very proactive before learning anything technical about trading. Now, if you've lost money in the past, you probably have to watch this even more. Or, of course, if you're new, this is a great foundation. Check it out, watch the whole thing from beginning to end, and you'll see what you've been missing the whole time since you started trading. Or if you're beginning a trade, guess what? You're ahead of the game. Enjoy the training. Welcome back to Module 2. So today, we're going to be talking about a couple very important aspects of the business that many people don't address. But before we begin, I first want to thank you for taking your time and really investing in yourself. The fact that you're still on here and watching and listening, taking notes, shows your engagement, shows your commitment, and shows that you really want it, where a lot of people just want that quick strategy. Show it to me so I could do it. So thank you for sticking with this. You're not going to be sorry. Now today we're going to talk about something that's so important, and that's the mental game. That is the mental game. It is something that many have become very big victims of, including myself. When I first started trading, I still remember it very well. I lost some money and I really went hard in learning the trading. I learned strategies, I had coaches, I had all these things that really helped me grow. And it really, really did help me in a big way. Strategies were key for me. Building my trading plan was huge for me. That changed the game. But what happened was, even after I got it, things went a certain direction certain times, and I would get emotional. And when I got emotional, a lot of those things that I learned, those specific rules that I learned that worked for the best, went out the window. And when I went to my coaches and I said, I lost $15,000 today, and I followed your plan, the coach told me, did you? Let's go over the plan. He went over the plan with me, and I was missing 3 pieces. He said, the reason you missed those pieces was because you were not in the same state of mind. You lost money because you got into a situation you were never in and you got emotional. I was like, wow. It hit me hard. I didn't follow the steps. I thought I did, but I was in a different state of mind. That day, I started focusing on the inner game. The game inside your mind. The game that most will never get to. And the ones that do it with experience. They mess up, they fail, they lose for a decade until they get numb to it. So you have a choice. You could take a decade of failure and loss to get to that point, or you could learn from others and take those decades, turn them into days. And that's what we're going to do today. We're going to learn the secret psychological pieces that sabotage us. So let's begin. The psychological sabotage. Many understand that trading is a very strategic game, and we need proven strategies to become great at it. Most spend time looking for every tactic in the book so they can have the upper hand. Although we will discuss those incredible pieces later on, we first need to realize another aspect that the 10% have been utilizing while the 90% don't ever even think about. I know I didn't. No idea. 20% of the trading success comes from tactical strategies, which we'll get into. 80% comes from psychological strategies. Yeah, You heard that right. 80% has to do with the mental aspect of the game. We will review the major psychological secrets that will set you on course to the success of the 10%. The game is simple. In order for someone to make money, someone has to lose money. And because of that, we get persuaded. We get persuaded by the people who want to see our money go in their pocket. And that's why we're going to talk about our psychological secret number 1, the persuasion phenomenon. Many believe that when you make a trade, it is your decision. But that's not necessarily true. There have been other influences that appear that make your decision for you on a subconscious level. Let's not get it twisted. Having the right people influence you is essential for success. But what happens if you're influenced by the wrong people? As we talked before, the news always has an agenda and is constantly creating urgency to buy or sell something. So the news is a big portion of it. But what's even more effective than the news are your friends. We always seeing your friends, people, colleagues, whatever it is, talking around, having small talk. Hey, I love Chipotle. Just using Chipotle here as an example, but they'll tell you how great Chipotle is because they love the company. They're the best, dude. I would invest in them. Heck yeah, they have the best food. It seems like casual conversations, but subconsciously it's getting into your head that it's a good company. And somewhere along the line, when you're making a decision, that may affect it. Our friends and people in our lives don't mean to influence us to invest, but our decisions get affected by their opinions. And when we talk about your friends and influences, one of the biggest influences out there is social media. In today's world, if you're joining a stock group, you're gonna see posts like this. Hey guys, I just made 125% profit on stock XYZ. Don't miss out this week. They're going to kill it. Wow. This guy must know what he's talking about. Now, he might have just one trade like this. We don't know. All we know is this is the one trade he had. Whether it's true or not, he might post pictures and it may be true. But how many times did he lose? Is he posting this because he's excited he finally got lucky? It's things we don't think about. But to add to this, the comments happen. And this is where that fear of missing out goes. You start seeing comments like, that's amazing. I'm actually going to invest in it myself. I missed out this week. I'm not missing out next one. This is obviously a no-brainer. I just watched the news and they expect great things from this company. My friends were just using this product. They really work great. Definitely a company to invest ASAP. I mean, when you see this, how can you go wrong? Everybody's thinking the same thing. You can't miss out on this one. There's no way. You don't want to be the only one missing out. Social media will make you truly feel like we need to get in on an investment ASAP. And then you fall into the cycle. With the social media, the news, your friends, you get into it. And it's a crazy cycle, man. The persuasion phenomenon cycle. And this cycle will create problems. And you'll go through it without ever noticing. You will just be in on it, and it'll drive you crazy. Crazy. And then you will encounter 2 problems because of it. Problem number 1, the anxiety of it all will cause you to buy the first stocks you will see because of the illusion of missing out on an opportunity. The whole logic went out the window. You're playing emotionally. And problem number 2, because of the same illusion, you may double down or even triple down on your positions and lose substantially more money. What happened here is you followed. You followed a cycle that you did not know you were in. How do you beat a cycle that you didn't even know you were in? You don't. You play the position, you put more money in because now you got to feed your ego. You made a decision and everybody said it would work. It has to work. So now that I'm down, let me put more money in to make up for that other money. And now you're gambling because you followed. You followed blindly. Here's the big thing though. The 10% are not followers of anyone. They master their plan and lead themselves to consistent gains. Here's the 10% solution. Stay away from social media and stay away from stock group chats. This is the new form of peer pressure. And peer pressure is not always intentional. Think about when you were in school. Peer pressure happens when you want to feel in rapport with everybody else. And today, with all this social media, chats, news, you want to feel a part of it, and it's stronger than ever. Now, don't get me wrong, these are great tools. But if you're new, it will only produce anxiety and will cause bad decisions. There are no shortcuts. You got to create your proven trading plan that you use consistently, and everything else are just additional tools you can experiment with. Think about the house. Think about that house. Sounds simple, right? But this is where people fail. And what's worse is these people put in time to learn strategies. They took that time, but they were missing the elephant in the room that took them either many years to learn, but most, the 90%, just give up because they believe it's the strategy that didn't work. Never copy anyone's trades without having your own foundation. This will guarantee a huge disaster. In today's society, there's so many people trying to get your money, and they'll tell you, I'll trade, you copy. One of the most biggest ways people lose money, and why is that if they're so smart? Doesn't mean they don't have a lack of education in the stock market or anything like that. They have a core of their own and they trade with it. And what happens is when they make a trade and something goes a different direction, people believe that because this person is doing it, that they're going to get it right every time. That's not true. Nobody gets it right any time. And anybody who tells you differently is trying to sell you something. The market can be crazy. The question is how you react to it. Well, if this person is successful, and they might be, they might have done it for 20 years. They know how to get out of a trade. They know how to manage the trade when they're in it. You can't do that live. You can't. And a lot of times, when this happens, they'll tell you a trade that they put in 20 minutes ago, which is already too late to get in on. But you'll get in on it anyways because you don't want to miss out. And now you're back in that persuasion cycle. So be careful. Be careful. If you have a good core and you build a trading plan and you have it, okay, maybe you could use this as maybe a small little help or maybe a watch list, but don't follow anyone blindly. Psychological secret number 2. Invest based on inspiration, not desperation. When trading, it's very easy to look up a strategy on social media or YouTube and try to make something happen. I mean, come on, it's so easy. It's out there. It's free. You're very inspired to put in the trade that you believe will go up. I mean, come on. There's no way this can fail. Everyone is talking about it. Every video has it. Everybody's just saying this will happen. This will definitely happen. No problem. Guaranteed. Gotta get in on it. And you do. You got in and you're happy. You're doing your thing. The stock's gonna go up. I'm gonna have some nice money at the end. I could finally get that little car I wanted. This is great. Thank God for social media. Thank God for YouTube. These guys are great. But then it happens. You start to lose. The stock is going down. Your account starts depleting. And you are now in a panic. Desperation has kicked in. The logical part of you that was in the driver's seat has spiraled out of control. Your emotions are now running the show. You weren't prepared for this. It was supposed to go up. Everyone said so. This was not supposed to happen. So what do? What do you do now? You do the only thing you can. You stick it out. I mean, you've gotten this far. It has to turn around. Everyone said it will do great. You keep waiting for the turn. But then it happens again. You lose even more. You went from 10K to 2K. You finally can't do it anymore. You have had enough. You cash out your 2K and take an 8K loss. That's the day you decided never to try the market again. All you wanted was to invest and make extra income. You somehow ended up fighting not to lose it all. Congratulations. You just became the 90%. You became what everyone thinks they'll never be. It wasn't your fault fully. You were a victim of the cycle. The 10% don't blindly trust anyone's advice. They investigate on their own and then execute. I never really fully understood that for a long time. I lost money when I first started. I did. And it was because I was looking for a way. I was listening to everybody. I was trying to put it all together, not realizing that everybody has a different philosophy and I had to stick to one. I had to figure out what I wanted to do and stick with it. And because of that, I got into the cycle. And after I got out of the cycle, lost 20 grand in a week. I tried again because my ego wouldn't let me give up. And when I tried again, I lost again. I tried a different strategy and I kept losing. It took me years to realize that it wasn't the strategy. It was I didn't have consistent strategy. I didn't have a trading plan and I didn't have the mindset to do so. I wasn't equipped for it. So let me give you the 10% solution. No matter how you find your next opportunity to invest, make sure to always analyze it with your own trading rules. Your own trading rules that you create that are made based on proven strategies that work. No one will ever have a care for your hard-earned money like you. No one. The 10% trade within their means. And that's something that's extremely important. Because we talked about all these things just now. And what really hurts the emotions the most is when your whole life is on the line. When all the money you put in is in there. When you have to worry about that money, that you can't lose it, but you put it in. That's scary. And you will make illogical decisions. and you will lose money. The 10% don't do that. They put the money that they don't worry about. They put their play money, if that's what you want to call it. They put enough money based on their risk tolerance where they could stay calm, logical, and make this a business, not a casino. So here's the 10% solution. Emotions get aroused pretty quickly when you're trading money that you can't afford to lose. You will encounter others who are making trades with a huge bank account. And that's easy to trade when you have a big bank account and you want to get to that level fast because you don't want to miss out. Just remember, at some point, those people started small as well and built it up organically. If you started big, you're going to lose big. Growth is the key to this. And just think about, people winning lotteries. People who come from nothing win lotteries, but you never hear happy stories. A lot of them will commit suicide. And when people did research why that happens, it's because their identity was still in a poor mindset. They weren't ready for all that money. They didn't build it organically. It came out of nowhere. Build yourself up organically and enjoy the process. Growth is going to give you the ultimate fulfillment with this whole thing. So don't be scared to grow. It's okay to start small. The beauty of it will be when you start seeing that account grow and grow on a compound interest. And it's going to grow because you're going to put in the money the right way. You're going to use it the right way. You're going to utilize all the strategies and it'll give you that snowball effect. The ones that start with a big bank account usually lose a lot more than others. 10% know that. Why? Because most of that 10% used to be the 90% that lost it. I know I have. These people don't have any favoritism and are in the same situation as you. Think about what that means. There is no favoritism and they're in the same position as you. No different. They're still trading. They're still doing the same strategies, just with a different number. Remember, the market doesn't discriminate against anyone. It will take the money you give it and will either reward you or it'll smack you around until you quit or learn. Everybody has had those moments. Whether you're the president, whether you're a peasant, whether you're a drug addict, whether you're the man, doesn't matter who you are. Black, white, green, purple, it does not matter who you are. The market does not discriminate. It will smack you around and you will learn. So when somebody has a big account, guess what? There is no favoritism. They will take that money just the same. So we play a proportional game. If they have $100,000 and they're doing great, they might have millions out there. 100,000 is not a lot. Well, you could get there, but you got to start somewhere. Once you get your system down and you see gains inconsistently with a proven trading plan, then you can increase your account. It's all about building the confidence with doing something that's consistent. When you stop looking for the next big thing, when you stop chasing and you finally figured out a formula that works. Don't get me wrong, you always want to learn something new, but the core has to stay the same. Your psychological philosophy of how you trade has to stay the same because right now you're at that moment where you could build it. Stay there. Build it. Don't give up. Invest in one thing and stick to it. And then when you see that result, when you see the progress, and you will know when in your gut you will know when it's the right time. Always trade with what you're comfortable with. Don't let anybody tell you how much you should be trading. You know your risk tolerance. Some are more risky than others. It's whatever you feel comfortable with to make the logical decisions. Diversification leads to sanity and profit. I remember when I first started, I would listen to people who would tell me about certain stocks. They would give me ideas and say, listen, this is the one. I know it's going to go up. I know it's going to do this. And sometimes they were right. And it felt so good because if I put in $2,000 and all of a sudden I see $5,000, it's great. It's great. It could happen if you do it right, you know? But what happens if it doesn't go your way and all your money's in one stock or two? The stress level is crazy. And even if it does go up or down, you're always worried about it. Diversification gives you that moment of sanity and relaxation. And it took me a while to learn that. Well, never again. Because what I noticed when I started diversifying, putting it in different areas, it's okay if one does not work because you're never stuck with one. You're never stuck with one. Not one specific stock is going to affect your whole bank account. So you diversify. So you found that one stock that is going to have you profit majorly, right? It happens. You have 20K in your account and you're feeling great about it. You decide to invest 80% of your account and put in 20K. You did your homework and you're pretty sure this is going to be a good situation. You were smart and made sure to cover your trading rules and everything. After investing in the company, you immediately saw a result. This is great. You're up $800 in one day. That's amazing. This is awesome. You can't wait to see what will happen in a week. Unfortunately, the investment took a dip, and now you're down $3,000. Now you're back to the emotional roller coaster, even though you prepared yourself this time. Think about that. You were prepared. You did your homework, everything. But now, when everything's in one stock, very hard not to get emotional because everything's in one basket. The 10% never trade just one specific company or even a specific industry. No matter how much you prepare, you can't expect to call it right every time. Doesn't happen. No one does it. It's never. I always believe that, you know what, when I learn this, I'll never make mistakes. Taking losses is part of the business. The question is, how do you minimize the losses? The 10% understand that. They're not going to get it right every time. Diversification is going to help. Being all in one investment handicaps you to being perfect. You may win a few, but it only takes one big mistake. One big one. Diversify your trading. This will enable you to stay calm, knowing that not one specific trade will kill your account. If you feel like the technology sector will do great, that's fine. But don't think you will be correct every time. Protect yourself with other investments. I think we made our point. Get involved in multiple things. When you use your strategies, check out, don't fall in love with one sector of a business. Do some technology, check out financial, check out different ones. And as you go through the process and you learn how to see these things specifically. How do you find a certain stock? These things will help you. But always look at different ones. Psychological reason number 4. Losing is part of winning. We all have a vision of what a superstar trader looks like. They have a lot of confidence and almost never lose an investment. They always seem to know where to invest to make money. Many of us believe this to be true and we aspire to be just like them. Many try to come up with the best trading rules and try to copy them perfectly. But no matter how perfect they follow the formula, they still suffer losses. And when that happens, the frustration builds hard. You tried the strategies that were given and still having losses? How? It's actually very simple. The 10% understand that nobody gets it right every time. They manage their losing positions just like the winning ones. No different. Part of the trading plan includes managing both losses and profits. When we talk about managing profits, if you're up in a trade, it's important not to get too emotional. I know I made that mistake when I was a rookie myself for a while. Because when you're up at a certain amount of money, you think it's going to keep going. So that emotional excitement gets you going and say, wow, I just went up 50%. This is amazing. Let's see if I could get it to 80. You're playing emotional. Managing profits is very, very important, how you do it. Or managing losses. Everybody makes bad calls, even the superstars. It's all about how you manage it. Now, when we talk about managing profits, let's look at this chart for a second. This is the company BJ's Wholesale. When we look at this is a great gain. So the stock went up. But even when you're gaining, you have to manage your profits. It's very easy to get excited here. You want to make sure that you get out of it in the right time and not chase. Or you can start losing gains. Or you could collect some of the gains into profit and continue going. But either way, you want to be strategic with gains. So this is a little bit of a technical part here, but when you're looking here and the stock's up, you may think it's going to keep going up based on your strategy. Who knows? If you do, maybe something you could do is take out the money you put in and collect profits and leave the other money in there that's going to work for you. How much more of a peace of mind you have when you took the money out that you invested originally and let the market work with the profits you already have. Great strategy if you understand it. When you look at managing losses, it's important to set up stop losses on your plays so you don't get emotional and start chasing. This requires discipline. So if a stock goes in a different direction, a lot of people use their ego. And what do I mean by using their ego? They think that this stock is going to reverse because they don't want to take the loss, so they continue chasing it. Boom, you just got emotional. You will encounter losses as well, like this, which is all part of the business. It's kind of how it works. Make sure you manage it. Very, very, very important. If you set up a stop loss, you could actually have it come out. So if you took $100, $200, $300 loss, that's okay because you're going to have other wins that are going to make up for it that are in the thousands. But don't chase. Don't fall into the game. If the loss was more than you anticipated, be logical about your decision. The reality is you only have to be right 60% of the time to be successful in the stock market. And 60% is a superstar number. As long as you got successful trading rules that you don't break. They include exit strategies to make sure you maximize your wins and minimize your losses. So you could see how important these things are, where a lot of people will put a strategy in place and never even think about a stop loss. We don't think that way. We think of those things reactively instead of proactively. The 10% don't do that. They set it up in a proactive fashion. Psychological secret number 5. The quickest way to success is to role model someone else who has already done it. This is probably the most important thing that I had to learn. I tried everything in the book to do it myself. I really did. I've watched videos, I've watched different things, I've done so many different aspects, I've read books. I looked into it, and the more I did, the more I got confused because everything is pulling into different directions to a point where you don't know what's real, what's not. And until I really got a coach, somebody who I know did very well in the market, someone who really went through the grind and told me about their mistakes. Unless someone did it, it's hard to share. That's when things changed. So if you get nothing out of this trading, but this will help you big. So the market has been around since the 1800s, and through the times, there were many losers. But at the same time, there were a lot of winners as well. You would think a couple centuries will definitely do that. As we discussed earlier, 80% of trading is based on human psychology. There have been many evolutions in the trading game. With computers, we have a lot more access to trade on our own as opposed to calling a broker every time we needed to make a trade. Just think about it. It used to be where you had to pay $50 a trade. Not everybody could do that. It was a very niche situation. Today, computers give us access, a lot more access. In addition, with smartphones, we are now more mobile with trading and can do it anywhere and anytime. I mean, think about it. From our pocket, you could take out, make a quick trade, and profit within seconds. I remember I used to be in a very high stress retail job where I used to manage a whole region. I had a lot going on. And I literally would be doing things, giving speeches, doing trainings, visiting locations. And I had set up stop losses from my phone. And I would see thousands of dollars going to my account in seconds. It's amazing what technology has brought us. Unbelievable. The one thing that has never changed is how people psychologically react to the market movement. Although it took many decades, if not even a century, to figure out that there's obviously patterns that continue to show up in the stocks. Unfortunately, most don't understand this. So they do what the 90% do. They look everywhere for information from the other 90% to put everything together into a plan that has never been proven. Guys, it's been over 2 centuries. If at some point people don't realize there's obvious patterns, and when you look at the picture here, you see things like resistance level, support level. These are some of the things that we could talk about in our technical part. They're keys to showing us that, hey, the market has certain elements that continuously repeat because people are creatures of habit and they're going to do certain things at certain times, not because by strategy, although some of it is, but because the way they react emotionally at certain times. The ones that could catch others react emotionally on a logical way win. The 10% literally will be able to pinpoint saying something's going to happen in this moment because that's what happens every single time. And that's really how you can predict certain moves on the market. So in result, they end up taking some serious lessons from the market and take many losses. It's a very painful and expensive way to learn, but majority do it on a daily basis. The 10% do it differently. The 10% believe that the mistakes by others create references for us to learn from so we can avoid making the same mistakes over and over again. And that's in anything in life. There's a lot of people who died from drugs. A lot. A lot of people died from different addictions. A lot of people got sick. But it is our decision. Do we want to try it ourselves and face that fear, face that issue, face that pain? Or do we want to learn from others and just proactively avoid it? The market is no different. People have made mistakes over the centuries. Our job is to pick up what they've already learned and go from there. So there are 3 ways you can approach this. 1, figure it out. Okay, I've tried this. You always think you're that smart one, that you'll get this. Well, the market is not as simple as you think, and it'll throw curveballs your way. This is obviously the perfect way to lose a lot of money. Doing this is the same as gambling. If you want to do it, go for it. However, it is a deadly approach, and it will end you at the 90%. So stay away. Another way is look everywhere for the information and try it out. Well, this can work, but requires a lot of experimenting and figuring out what works and what doesn't. The reason I'm so passionate about this 10%, to increase that 10% to a higher number, to get people out there, is to give people the right information. Give them the right way of doing things so they can avoid losing thousands and thousands of dollars like I did until I finally found it. Until I found the right mentor, until I found the right coach, until I found the right system, until I found the right trading plan. We don't want that to happen. Do you want to lose thousands of dollars to do that? Or do you want to do it the right way from the beginning? So try to avoid losing money. Or you could get a mentor with a trading plan. The 10% want to avoid the aggravation of figuring it out and go right to the answers. By far, the best decision of my life was to get the mentor I got. I did my research. I found this person has made money. They've made a lot of mistakes and they were real. Not somebody who just claims that they make a lot of money all the time. Somebody who's been through the grind. Somebody who's lost money. Someone who's learned the lessons and is out there, who has the right structure, who has the right content, and somebody who really taught me how to do it. Best decision of my life, saved me a lot of money after I lost a lot of money. And I'm very thankful for that. And I hope for you that you get that same experience. Get a right mentor. Get the right trading plan. In summary, be aware of the persuasion phenomenon. It's everywhere. We understand it. And because after this training, you're going to be very conscious when you see it. And you're going to avoid it. Invest based on inspiration, not desperation. It's all about investing the same amount of money that you're okay with, and you have the right strategy where you could have something called certainty, and you're inspired to do so. When desperation hits, you're in an emotional roller coaster. 3, diversification is key to sanity. Never invest in just one stock. That will kill your sanity for sure, and you will feel stress. The minute that stock goes down, be careful. You will feel the pain. Losing is part of winning. No one wins them all. It's how you manage it. And finally, the most important, mentorship is your fastest way to success. Other than that, guys, I really appreciate you going through this with me. I think you really, at this point, understand how important the mental game is. And I know you're going to avoid all these mistakes because you're better than that. Because at the end of the day, we're a lot more closer to that 10% than the 90. And I appreciate everything from you guys. Thank you for sticking to it. And I'll see you in the next module.